Good afternoon. Welcome to the annual general meeting of the company. My name is Penny Freer, Chairman of the Board of Directors. It's now noon, the time appointed for the AGM. May I introduce my board colleagues, James Agnew, Pam Garside and Ian Spence. Additionally, I do hope you will join me in welcoming Tony Ellingham, who was appointed to the board on 1st of September 2023. Also present with us is Emil Gigoff, a partner of Albion Capital, who will join us shortly to give a presentation on the company's results for the year ended June 23. And Emma will join me later for a question and answer session. The quorum for the AGM is 2 members entitled to vote in person or by proxy. This has been met and I therefore declare the AGM open. The notice of the AGM has been in your hands for the statutory period, so I'll take this as notice as read. As stated in the annual report, this will be my last AGM as I'll be retiring at the end of this meeting, having served 9 years as a director, 3 of which I've had the privilege of serving as chairman of your board. I'm delighted that James Agnew, an existing board member, will succeed me as chairman of the board. I'm confident that shareholders will benefit from the continued success of the company under his leadership. Due to the success of last year's virtual meeting, and in order to maximise the engagement of all members, the board have again acquired the services of Lumi to broadcast this year's AGM. Members are able to participate fully in the meeting, which includes voting on the board's proposed resolutions and a question and answer session. Before we move on to Emil's presentation, there are just a few procedural issues to clear up. The resolutions will all be voted for by way of a poll, which follows how the company conducted the process last year. The votes received under the poll will be added to the proxy votes that have already been received and verified by the registrar Computershare. If you have already completed and submitted a proxy prior to this meeting, you don't need to vote again on the poll unless you wish to change your vote. I now declare the poll open. The list of resolutions will automatically appear on your screen, and you have 3 options for each resolution. You can vote in favour, you can vote against, or you can withhold your vote. Please select the option that corresponds with how you wish to vote, and once you have selected your vote, the option will change colour and a confirmation message will appear to indicate your vote has been cast and received. To vote on all resolutions displayed, select the Vote All option at the top of the screen. If you want to change your vote, reselect your choice. Now moving to the main business of the meeting. Following the manager's presentation, the directors and the manager are happy to answer questions from members about the presentation or about the proposed AGM resolutions as time permits. I'd like to thank all members who've already submitted their questions and queries through the chairman's email address. And if you wish to ask questions now, please select the messaging icon from within the navigation bar, type your question at the top of the screen, and to submit your question, click on the arrow icon to the right of the text box. I'll now hand over to Emil Gigoff for his presentation. Thanks, Emil.
Thank you, Penny, and a warm welcome to all shareholders who are joining us for this annual general meeting. May I have the next slide, please? Would it be possible, this is a point of order for the Lumi team, to actually bring the slides large on the screen? Right. In my presentation, I will cover the following points. I will speak firstly about the financial summary and put this in the context of the background of the economic conditions that the company's been operating in for 12 months. We'll touch on the performance data and some of the highlights of the year. The focus of the presentation is going to be very much on the investment portfolio and the investment strategy. And then towards the end of the presentation, we'll speak about what we're doing in ESG and responsible investments, what are our comments on the prospects, and then briefly mention the highlights of the Q1 results, which were announced to the market earlier today. Next slide, please. Financial summary for the year to 30th of June. So just to be clear, we are reviewing the 12-month period from the 1st of July 22 to 30th of June 2023. And in that period, the company increased shareholder value by about 1.06 pence per share, which is a return of 3.15%, slightly below the 5% target that the company has set itself. But I'll come to explain the kind of conditions that the company operated in over the period and why we think this is not a particularly bad outcome. The total tax-free dividends per share, which were paid to investors in two separate payouts, were 1.63 pence per share. This represents approximately 5% of net asset value, in line with the dividend distribution policy. And the net asset value per share as at the end of the period were 33.13 pence. Next slide, please. To properly understand the context of the financial results, we should speak a little bit about the background to the financial results and the kind of market conditions that we operated in. In that period, was characterized through quite significant changes in terms of the global macroeconomic environment and the geopolitical environment, which led to quite a number of uncertainties economically, especially for large corporates. We saw a significant increase in inflation and the consequent very rapid increase in interest rates. Just to remind ourselves, at the beginning of the financial year, on the 1st of July 2022, the Bank of England base rate was 1.25%, and it ended at 5% at the end of the financial period. This was probably the fastest rise in interest rates since the late 70s. And what that meant for large companies is that they started reconsidering their investments, in many cases postponing investment, looking very closely at budgets and costs, and delaying purchasing decisions. And this is how this has impacted on the portfolio of smaller companies that we invest in, who typically would sell their software, their products and services to these large corporates. So all of this has impacted on the growth rates of a number of our portfolio companies. In addition to that, we saw a very reduced level of mergers and acquisition activities. So that resulted in very few exits from the portfolio, something which is very understandable in a climate where companies are reluctant to invest. Having said all that, on the positive side, many of our companies provide mission-critical products to their customers and therefore well embedded into them. So that is providing a degree of protection in those quite volatile and difficult market conditions. Next slide, please. A venture capital trust is a long-term investment vehicle. You've heard me say this before, and therefore we believe that the right way to look at the performance is over the longer term, 5 and the 10-year period particularly, which aligns with the investment policy and the duration with which we invest for a number of our portfolio companies. We typically invest with a 5 to 7 year horizon and often stay with companies and support them over 10 years or more. Looking at the 10-year return, the average is 7.7% per annum. On a 5-year basis, 7.2% per annum, which is comfortably exceeding the 5% target that the company should set itself. Next slide, please. Let's talk about some of the highlights in the year, starting with fundraising. The company raised just over 11 million in the financial period, very similar to the previous year. In terms of fundraising for the current financial year, we have made our intention known that the company will be raising money very early in January again, as part of the Albion top-up offers across 5 of our venture capital trusts. Exits were very few. As I mentioned, the M&A environment was difficult, and therefore we only realized a small amount of our investment portfolio. However, our investment rate remained quite robust. We made 22 new investments, of which 11 in new companies and 11 in the existing portfolio of companies. Share buybacks very much in line with expectations given the size of the company. And the dividend payout of 4.2 million was in line with the 5% dividend distribution policy. Next slide, please. What were the key value drivers in the year? Quantexa is our biggest investment in the portfolio, and I'm pleased to say that that company has continued growing and increasing in value, contributing 6.8 million to the value increase for the year. A number of other companies also contributed, including Convert Media, but also several others. And against that, we had several companies that underperformed to their business plans, and therefore the value of the investment was reduced. These include Black Swan Data and New Motif. In both cases, those companies are now valued very close to zero, so we do not expect any Further downsides, indeed, Umotive was exited following the period end. A number of other write-ups and write-downs were recorded during the year. I won't list them all. All of them have been set out in detail in the annual report and accounts. In total, the portfolio generated 3.8 million of uplift. Next slide, please. Let's look at an analysis of the portfolio by sector. The portfolio contains 62 companies employing circa 5,000 people, predominantly in the UK, but also some of them overseas. Looking at the composition in terms of net asset value, 28%, which is the green part of this circle graph, is represented by cash and net assets. This cash will be utilized to invest in new investment opportunities, to back the existing portfolio companies where they need further funding for growth, to cover the dividend payouts, and to ensure that we can continue buying back shares as and when needed. The other key sectors in the portfolio are the fintech sector. These are typically technology companies selling to large enterprises in the financial services space. We also have 13% of the portfolio in other software and other technology type companies. Our healthcare part of the portfolio remains broadly unchanged at about 17%. These are, again, technology companies focusing on the delivery of healthcare or working closely with pharma companies. And then we have the renewable energy assets that have been in the portfolio for several years, and other smaller investments, which include the independent school, Radia House, which is not so small, but it's part of a smaller segment of other investments. Next slide, please. Aside from looking at the sector composition of the portfolio, we also look at the maturity of the companies in our portfolio, and typically characterize them by looking at the revenue generation into three separate categories. The first one is the early stage. These are companies with less than 1 million of revenues. The growth stage is the second category with revenues between 1 and 5 million. And the scale-up stage are those companies that have become larger and are growing with revenues of in excess of £5 million. As you can see from this chart on the left, the predominant part of the portfolio by value is in scale-ups, but the early stage and growth portfolio are important to us because those are the future scale-up companies that we're backing to continue growing. When we look at it and analyze it in terms of number of employees, we see a similar picture with more than half of the portfolio by value in companies with more than 100 employees. Next slide, please. Our top three investments accounted for 26.4% of the net asset value as of the year end. These are Quantexa, Provica, and Radia House. All of those have been in the portfolio for some time. And I'll just mention quickly to remind ourselves what these companies do. Quantexa is a very advanced technology company looking with customers mostly in the financial services sector and in government, and helping them by utilizing technology to fight and prevent financial crime. We backed the company in 2017, and it has grown dramatically since then. It is now a very large business, and I'll come to speak about Quantexa in a bit more detail on the next slide. Provica, sorry, if we can go one slide back, please. Provica is a specialist pharmaceutical company focused on children's medicines. Many of you who came to our shareholder seminar last week would have seen the CEO of the company present. It's growing again very fast and expanding its portfolio of products. At Radia House is our independent school, which we've invested in since 2015. It continues to grow. It's a profitable business, delivering a good return. Overall, these three companies are valued at just under 25 million against the cost of 4.6 million. So they've already delivered in excess of 5 times their investment cost. Next slide, please. Just looking at Quantexa in a bit more detail, this being our largest company in the portfolio, it was established in 2016. It currently represents 11% of NAV as of 30th of June 2023. In the 7 years since it's been around and 6 years since we backed it, the company has grown from a small group of people to approximately 650 across 14 different offices globally. Its most recent investment round, Series E, received 100 million of investment, led by a new investor in CIG, which is the Sovereign Wealth Fund of Singapore, which valued the company at circa £1.4 billion. As such, it became the first British unicorn, and that is a term to define a company in the private markets with valuation over $1 billion. So the first British unicorn of 2023. So far for this year in Europe, there's only been 7 unicorn companies formed. So we're proud that one of those is Quantexa, that we backed at the very early seed stage. With ample capital behind it, the company continues to invest in its technology and specifically in AI, which is revolutionizing its business. Next slide, please. Just to give you a flavor of some of the new investments and the type of investments that we made. As I mentioned, we made 11 new investments during the year. Those include Pepi, which is a slightly later stage business that sells a digital platform to large corporates to enable them to help their employee bases with underserved health and wellness problems. Pepi is particularly focused on menopause, but also a number of other areas where people need support in life. Tokyo is a very interesting young company that provides embedded finance solutions. Embedded finance solutions to companies that are typically non-financial services companies, and Tokyo allows them to provide financial services products to their customer base. CS Genetics is a health tech company. It's a novel developer of single-cells genetic sequencing solutions. Think, another company that presented at the shareholder seminar last week, is a cybersecurity platform that focuses on what is considered to be the weakest link in the cybersecurity chain, i.e. the humans. And it works closely with enterprises to ensure that their employees are aware and know how to respond to cybersecurity threats. TEM is another interesting business in the broad space of green tech. And green tech, we term technologies and companies that facilitate the transition from fossil fuel to green energy, to the green energy economy. TEM provides a trading platform that connects the owners of renewable energy assets and producers of renewable energy to the consumers, typically businesses, of renewable energy. So, as such, it's a business that's operating in a very dynamic market and a very fast-growing market. Next slide, please. We also invested in 11 follow-on investments in the existing portfolio. Those include Helios, which is a company that provides psychological care primarily to children and adolescents. Runa, a fintech business previously called WeGift, which provides a platform that enables corporates to digitize the incentives and payouts that pay to employees or customers or any other suppliers in the ecosystem. And Provica, which I mentioned earlier, our specialty pharmaceutical company focused on children's medicine. Next slide, please. Let's remind ourselves of the investment strategy. In terms of the stage of investment, our VCT is investing the seed to Series B stage, and that is early stage to slightly later growth stage. Typically, when a product has been developed and is already selling in the market, but the company needs finance and capital and expertise to scale up commercially. We back long-term trends in technology. We are less dependent on economic cycles, other than to the extent I described earlier. But we're backing long-term trends, and in the past we've backed trends such as the move of computing to the cloud, in terms of new technologies being developed in the health tech space and the healthcare space. And nowadays, obviously, artificial intelligence is everywhere, and many of our portfolio companies are benefiting from access to the revolutionizing generative AI technologies. Our focus is on companies that provide business-to-business solutions. So less focus on the consumer. We think we have little exposure to the consumer in the portfolio. And we are targeting 2 principal areas. These are software and healthcare. Next slide, please. We're committed to responsible investing, and we work very closely with our portfolio companies to create the right policies and processes for them in terms of ESG. We believe that ESG is a big driver for shareholder value generation. We know from the data that we've seen and from various studies that have been conducted, these companies that adopt ESG as part of their overall strategy perform better in the long term, thereby delivering better value to their shareholders. So we're very committed to working with them in a process of continuous improvement on all aspects of ESG. Next slide, please. We're also very focused on ESG at Albion across all three pillars of environmental, social, and governance. And I won't dwell on each and every initiative we have across these pillars, but I'd like to point out the Radia Accelerator program, which supports women founders. We have done our own research, and we've seen research done by others, which suggests that approximately 75% of venture capital money goes to funding male-only founding teams. We think that's a big lost opportunity, and that more women should be encouraged to start their own businesses. And this is what the Radia Accelerator program is there to do. It is focused on women who are in executive positions, typically in large corporates, and who are contemplating or planning to start their own business within the next 12 months. The Radia Accelerator provides a number of talks and other initiatives, shares insights, and provides various mentors and people who can help these future women founders to set up their own companies. It's been running for less than a year, and so far 10 new companies have started on the back of the Accelerator program. Next slide, please. Let us briefly comment on how we see the prospects for the short term for the next 12 months. We believe that the challenging macroeconomic conditions are here to remain in the short term, and that may result in slightly slower portfolio growth in terms of revenue, and possibly more volatility in terms of valuations. However, we have a well-diversified portfolio across sectors as well as stage of maturity, so we think that there's a level of robustness in the portfolio that should put it in good stead for the next 12 months. Many of our companies are focused on mission-critical products and services. They're well embedded with their customers, and that again should provide some degree of resilience and long-term growth. As I explained, we have limited exposure to discretionary consumer-facing sectors, and we're not bullish on the consumer economy for the next 12 months. Finally, a good big positive is the level of cash reserves at the company, which will enable it to capitalize on new opportunities and to support the existing portfolio. Next slide, please. The first quarter of the current financial year, the results for that were announced earlier today. There has been a decrease of net asset value of 2%, which reflects movements across a broad number of companies and valuation adjustments, principally because of the reasons I just described, i.e. slightly slower growth. And here we are still talking about very fast-growing companies, but that growth may have moderated somewhat in the short term. The first dividend of 0.83 pence per share will be paid on the 30th of November 2023. This is very much in line with our policy of paying a 5% dividend payout for the full year. Many of you would have attended the shareholder seminar on the 15th of November. I spoke to quite a number of shareholders there and found that many of them found it really informative. It is a great opportunity to meet the Albion investment team, as well as some of the portfolio companies and the board directors across the 6 VCT funds. So we encourage shareholders to attend this event. It's our flagship event, and therefore look out for it next year. Some of the content presented at the shareholder event is now available for shareholders to view online. Those of you who've opted for electronic communications would have received an email with links towards where that content is currently held, and you can use that to view it. Next slide, please. Penny alluded at the board changes and described some of the board changes that are taking place in the company. She's stepping down as chair at the end of this AGM. Penny has served on the board for the last 9 years, in the last 3 of those as chair. The proposals going forward is for James Agnew to become chair of the board and the nomination committee, for Tony Ellingham, who joined the board on the 1st of September, to become chair of the audit and risk committee, Pam Garside to become the senior independent director, and Ian Spence to become the chair of the remuneration committee. Next slide, please. Before Penny leaves us, I'd like to just dwell for a minute on the last 9 years and her very significant contribution to the successful performance of the company. In those 9 years, the company has increased the shareholder return by 66%. it has distributed over 22 pence of dividends to shareholders. More importantly, it grew from a 30 million portfolio to a NAV of 92 million as we sit here today, so more than tripled in size. The portfolio in terms of composition was completely changed on the back of the changes in the venture capital trust rules that came into effect in 2015 and subsequently. 9 years ago, we invested in a number of asset-based businesses, including hotels, pubs, and care homes, and all of those were disallowed for VCT investment since. So we have now transitioned the portfolio to become entirely focused on technology. It is a successful portfolio with a diversified base of investments, many of which are performing really, really well. And Penny's contribution to all of this has been very significant. On a personal note, and on behalf of Albion, as the investment manager, it's been a real pleasure working with Penny because she's always been able to provide the right balance of challenging us as the investment manager as well as supporting us. So thank you, Penny. And on that note, I'm passing back to you for the Q&A session.
Thank you, Emil. And thank you very much for those kind words from you and from all of Albion. I'm now going to invite questions that have been received by the Lumi platform. We do have one already in, so I'll just read this out for everybody. 3 companies, Dices, Black Swan and Umotif, have costs of over £1 million, but minimal valuations as at June 23. What has not gone right with these companies? What action is being taken to turn the companies around? And what lessons have been learned? Emil, I'm going to ask you to answer that question.
Yeah. Thank you, Penny. I mean, I touched on a couple of those. I briefly spoke about Black Swan and Umotif. I'll include Dices in the same commentary. In a large venture capital portfolio, it's inevitable that there will be some failures. And in the case of all these 3 businesses, they underperformed to their investment plan, underperformed to their own internal plans. And having supported them and worked with them over a number of years, we've come to the point where we believe that those businesses are struggling and therefore we should be writing down the investment. It's not unusual in a large portfolio of 62 companies to have a number of failures. The important thing is to have the winners. And as I've described and illustrated with Quantexa as the main example, is those winners that actually generate the returns for shareholders. Focusing on having those winners and making sure we support them as they grow to become very big businesses is really where the true art of venture capital lies. So I believe there will be other failures in the portfolio as we work with these companies, as some of the smaller ones try to grow but don't quite manage to get there. But as long as we have the winners, I think we'll be able to generate those positive and exciting returns that shareholders are investing for.
Thank you, Emil. Emil, can I also just ask you to say a little bit more about the plans for fundraising in 24? You touched on it, but perhaps you could just give a little bit more colour.
Yes, we have made an announcement already that 5 of our venture capital trusts will be launching a top-up offer very early in January. So watch this space. We are kind of finalizing the proceedings for that, finalizing the prospectus. We should be launching 60 million fundraise across 5 of our VCTs in very early January.
Thanks, Emil. I think the combination of last week's very well-attended shareholder seminar plus the imminent autumn statement means that we don't have many other questions to answer. So as always, if people have questions, please feel free to write into the chair at Crown Place email, and we'll do our very best to come back to you as soon as possible with those answers. I'm now just going to continue with the formal business of the AGM. Full text of each of the resolutions were set out in the notice of the meeting, and the board is recommending members to vote in favour of all the resolutions. I'm briefly going to summarise those resolutions. First resolution is to receive and adopt the company's accounts for the year ended 30th of June 23, together with the strategic report and the reports of the directors and the auditor. Second resolution is to approve the directors' remuneration policy. The third resolution is to approve the directors' remuneration report for the year ended 30th of June 23. The fourth resolution is the re-election of James Agnew as a director of the company. The fifth resolution is the re-election of Pam Garside as a director of the company. The sixth resolution is the re-election of Ian Spence as a director of the company. And the seventh resolution is the election of Tony Ellingham as a director of the company. The 8th resolution is the appointment of Johnson Carmichael as auditor of the company to hold office from the conclusion of this meeting to the conclusion of the next meeting at which the accounts are to be laid. The 9th resolution is to authorise the directors to agree the auditor's remuneration. The 10th resolution is to allow the directors to allot shares. The 11th resolution is a special resolution that will give the directors the power to disapply preemption rights. The penultimate resolution, which is also a special resolution, is to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. And the final resolution, which is again a special resolution, is to approve a reduction of the share premium reserve of the company to increase distributable reserves. The results of the voting, including the proxy votes on each of the resolutions, will be announced after the AGM through a regulatory information service announcement. Additionally, the results will be published on Albion Capital's website as soon as reasonably practicable. I confirm that the poll voting has now concluded and I declare the poll closed. In the meantime, I will show on the screen the current proxy votes that have been received by the registrar. As you will note, the proxy votes are comfortably in favour of all the proposed resolutions. Thank you. That concludes the formal business of the AGM. I would like to thank all members who have joined this AGM by webcast. The board welcomes any feedback you may have. And as I mentioned earlier, you can do this by sending an email to crownchair@Albion Capital. For those of you who are interested in seeing a recording of this AGM, it will be available on the Albion Capital website in due course. As I've now officially retired, I would like to thank all my colleagues for their support and friendship over the years and to wish them and the company well for the future. There being no further business, I declare the meeting closed. On behalf of the board, I do hope you stay safe and well, and thank you all very much for attending.